China's trade surplus with the U.S. rose to a new high of $35.5 billion last month as businesses raced to prepare for a threatened increase in tariffs over the new year. China's exports to the U.S. rose by 9.7% year-on-year to $46.2 billion in November, while imports dropped 25% to $10.6 billion, according to data published by the General Administration of Customs in China on Saturday. But China's overall trade last month was worse than expected, with export growth slowing to 5.4% and import growth slowing to 3%. This marked a big fallback from the double-digit expansions recorded in recent months as China's economy continued to slow down, with many small private exporters cutting back their operations and laying off staff. However, due to the Chinese currency's depreciation against the dollar, in yuan terms exports rose by 10.2% and imports by 7.8%. Exports to the U.S. are likely to have been bolstered by American businesses front-loading their stock by buying more goods from China before the threatened increase in tariffs kicked in. However, the pace of export growth to the U.S. slowed from 13% in October, which suggested that the impact of front-loading was fading as many American buyers had stockpiled goods well in advance. The U.S. had been threatening to raise tariffs on $200 billion of Chinese goods from 10% to 25% on January 1, but this has since been deferred following last weekend's meeting between Donald Trump and Xi Jinping in Argentina. Nationalist bubble partly to blame for fears over China's global role. The two agreed a 90-day window starting from December 1 to try to resolve their differences, but if they cannot do so, then the threatened tariff increase will kick in on March 1. The temporary trade truce between U.S. and China, as well as China's latest promise to buy more U.S. goods, could reduce the trade surplus in future, Zhang Chao, chief China economist from Haitong Securities, said. Over the first 11 months of the year, China's total trade with the U.S. rose by 7.2% to 3.8 trillion yuan, $557 billion, accounting for 13.7% of the value of China's overall trade. However, China's exports to Europe rose only 6% year-on-year, sliding from 14% in October, while South Korean imports of Chinese goods fell by 3.6% compared with the same period of last year. Other economic indicators also suggest that China's exports are facing stronger headwinds. The new export order component in China's official purchasing managers index had been contracting since June and barely picked up in November. Another key export barometer is the biannual Canton Fair. The most recent event, which ran from mid-October to early November, saw transactions falling by 1%, or $300 million, compared with last autumn. Xu Jianwei, senior China economist from French bank Natixis, said the bigger fall in imports from 21.4% in October pointed to weakness in domestic demand, but higher base number from November last year also needed to be taken into account. In particular, imports of soybeans plunged by 38%, while iron ore, coal and steel imports also fell. Chinese state research signals reluctance to change economic model. The next set of economic data, including retail sales figures, fixed asset investment and property investment, will be released next week. If there are more bad economic numbers, it could affect policy planning for next year at the coming Central Economic Work Conference, Xu said. The conference usually takes place in mid-December and is where senior policymakers agree directions for the following year's policy, details of which are released in March during the annual National People's Congress.